Greetings to you all, Chatmaster here. Welcome to Chatmaster FX. Today we are going to look at the key level over under, which is the claw. This is one of the big 5 strategies, and it is a high probabilistic setup. So you need to understand the dynamics of it. Once you understand the dynamics of it, then you can be able to trade it on the live market with confidence. So we are going to look at the general information about the key level over under. The close setup is an advanced modification of the over under SOP. So this setup is an advancement of the over-under setup. So in this course, we are not going to look at the over-under, but you just have a general look at the over-under so that you guys can have an understanding of the basic or the building blocks of the strategy. One of the reasons why we are not going to be looking at the over-under setup in this course is because we realize that the over-under is not that much of a high probabilistic setup as compared to the close. So when we did our back testing and our forward testing, we realized that it's better for us to only use the claw in this course. So generally we are going to look at the anatomy of the over under, so that once we look at it, it will be easier for you to understand the much advanced version of it, which is the key level over under. So guys, you can see here, this is the anatomy of the over under. So you can see guys that we had a rally here, and once we had a rally here, we see a drop in price. Then it created a low, then the price went up and created a new higher high. So guys, you can see that once the price is going down, then it created a kink here, which is a decision point inside the golden zone. So once the price did that, we can see that the price was able to engulf this low, and it created a lower low. So as the price comes to this decision point inside the golden zone, then you can be able to place your trade. So this is the anatomy of the over under. So we are not going to do much with this setup since it's not the setup that we are going to be trading. So let's go straight to the key level over under. So you can see guys here that this is the advanced version of the over under. So you can see guys that now we have a key level here. So our key level must be of at least 2 touches, as you can see here. So you can see that here we can see that this resistance was actually broken, and the market was able to create a higher high here. So you can see that this is the over and this is the under, and you can see we have a low here, and you can see that as the price was going down, we can see that it actually created a decision point inside the golden zone. And now we can see that this low was actually engulfed, and the price was able to create a lower low. Once we have this lower low, we know that as the price comes back to the decision point where there is a kink here, which is our decision point, the price is more likely that it's going to drop. So guys, this is the anatomy of the over under. You can see guys that we have the golden zone, and here in the golden zone, that's where you can be able to place a trade. So you can find some decision points inside the golden zone. Once you have a decision point that is not inside the golden zone, then that decision point is not valid. So the decision point should only be in the golden zone. So you can see here, this is where you can put your stop loss, and we have our first target profit on the low here, and you can see here we have our target profit 2 on the lower low. So guys, we are going to look at the general terms and conditions of the setup. So there should be a key level in the immediate historical data, as we saw, guys, that there's a key level there when when the market created a high. Then we saw that once that high is created, there should be at least 2 touches of resistance. Then the price makes a fake out, going to the upside to create a higher high. Then once it does that, then we can qualify it as a key level. So that's the first thing that you need to look for on the setup. So there should be a breaker in the flow of the market structure. As you can see, guys, that low must be engulfed. Once that low have been engulfed, then that's another condition that you need to look for. Then there should be a decision point located inside the golden zone. So once the decision point is located inside the golden zone, then that's when you can be able to use that decision point as a candidate that is more likely to hold the price. So basically, those are the terms and conditions that you need to look for when you are trading the key level over under. So let's go straight to the chart examples so that you can be able to identify these things on the real market. So let's look at this example. We are on volatility 25 index on a time frame of 30 minutes. So you can see, guys, that on this setup we have a key level here. We have a key level here of almost 1, 2, 3, 4 touches. So this is a strong key level. So once we have a key level, we know that our condition number 1 has been met. And you can see here that here we have our high, and you can see that this high was actually broken and the market was able to create a higher high. So once we see that we have a higher high here, then we can be able to draw our golden zone. Once we draw our golden zone, then we can wait for the price. When it returns from this higher high, it needs to engulf this low. Once we see that the price is actually successfully engulfed this low, then once it creates this low, then we know that our condition number 2 has been met. So generally now we have the over, we have the under, and we have actually able to determine our golden zone. So you can see that inside the golden zone we had a decision point here, which is a hidden base. So you need to look at it on the module that I published on the WMaru. You need to know what type of a decision point that this decision point falls under. So you can see, guys, that the other condition, there should be a price approach, approaching. So you need to be able to spot a price approaching when the price is coming towards a decision point. So in this case, you can see that when the price was approaching this decision point, it actually went there in the form of accumulation. You are going to see what we mean by accumulation when we discuss one of the price approaching strategies. And you can see also that we had a confluence whereby we had accumulation and also a 3 drive, which is also one of the price approaching that you need to look for. So once the price returns to this hidden base, then that's when you can be able to place your trade, and you can put your stop loss above the higher high. And our first target profit here is on the lower side, of our low here. And you can see also here on the lower low we have our target profit number 2. So that's it, guys, for example number 1. So let's go to example number 2. On example number 2 here, we are on volatility 25-1S index on the M15. So here, guys, you can see we have a key level here that is of 1, 2, 3 touches. And you can see that once we have a key level here, we can see that the price was able to create a higher high. Once it creates a higher high, then we can be able to draw our golden zone. Once we draw our golden zone, we can see that as the price was going down here, we can see that there was a low that was formulated. So we now wait for the price to engulf this low, then we can be able to draw our over under setup. And you can see, guys, that the price was able to create a lower low. Once the price created a lower low here, you can see that as the price was approaching the decision point that is here, it needs to approach it on the PA basis. So we can see that the price actually was doing accumulation. So once you see this accumulation, then it actually signifying, well, once you see a price approaching, it's actually telling you that this decision point is significant. Once you don't see any price approaching setup, such as the accumulation, 3 drive, the fake out, etc., then where there is no PA, no go. If there is no PA, no trade. So you have to watch for that, guys. And you can see that here we had a confluence, and we can see that we had a flip here, we had a flippy, and we had a weakening base. So we had a confirmation, we had a good confirmation here, and you can see that as the price reached this decision point, it was able to successfully hold the price, and we saw a drop in price. And you put your first take profit on this low, then you put your second take profit on this lower low, and your stop loss is just above the higher high. So, guys, this is example number 2. So we had a flippy, we had accumulation, we had a weakening pair. So that's a confluence. So you enter here, guys, you enter. So let's go to example number 3. On example number 3, we can see this setup where we have a key level here, and you can see that this is a kind of a flippy key level, where we can see that we had a good support here, and that support tend to resistance here. And you can see that the price was able to break this high, and it created a higher high. Once the price creates a higher high, then we can be able to draw our golden zone. And you can see that, guys, the price dropped here, and it created the low. Once it created the low, we can see that the price went up to create a higher high. When the price was coming back, you can see that there was a decision point that was actually created here, and the price went down, and it engulfed this low, and it created a lower low. Once it created this lower low, we can see that as the price was approaching this decision point, it approached it in the form of accumulation. You can see accumulation here, and you can also see that we had a 3 drive. and also with the flippy where support tend to resistance. So you can see, guys, that we have many price approaching guys here. So once you see all these guys coming out, then mostly you don't hesitate to place a trade here, this decision point, because what is happening here, this price approaching that is happening here, is actually telling you that this decision point is valid. But once you see that there is no price approaching, then it means that that decision point may not be able to hold the price. So if there is no price approaching, no go. No price approaching, no trade. You have to understand that, guys. So let's go to example number 4. In this example number 4, guys, you can see we have a key level here. Once we have a key level here, you can see that we have a higher high that was created, and we have our golden zone. And what you see, guys, is that this low was actually engulfed on the way when the price was on the way down. And you can see, guys, that on this higher high, when it was created, you can see that there is a decision point. We have multiple decision points here. We have this decision point, we have also this decision point. So once we have multiple decision points, you have to check the price approaching. If the price approaching happens on this decision point, then it means that that decision point is more likely to hold the price. And you can see that this decision point was actually consumed by this one. So this one might be more probabilistic and having higher chances of holding the price. And you can see, guys, this is one of the W Maru. You have to check the W Maru journal and you understand what I am talking about here. So once you see this W Maru, then you know that most likely when the price returns to that area, the price is more likely to respect it. And you can see, guys, that we have our clear over under here, and the depth of engulfment was to this level when a lower low was created. And you can see that when the price was approaching this decision point inside the golden zone, there was a flip here. We can see that this was support, and this support here turned to resistance. So we have a flip here. We also had a 3D 3 drive. So once you see this price approaching, it's actually telling you that this decision point that I am approaching is actually the true decision point. So once you see that happening, then you can be able to place your trade here, put your stop loss. You can put it even above the decision point, or you can put it on this higher high, but it's actually a higher risk, because if this trade turns against you, you can see that the stop loss will be very far. But sometimes when you want to actually reduce your risk, you can see a very crucial point where you give your price room to breathe, and when you give it the room to breathe, but also minimizing your risk. So here we will be having our first target profit on this low, and we have our second target profit on this lower low. So this is the example, guys. We had the flippy and the 3D confluence, and you can see, guys, that the price actually dropped once it reached the decision point. So let's go to the last example number 5. So we can see, guys, on this example number 5, we have a key level here. Once we have a key level here with multiple touches, and we were able to draw our golden zone, because the price actually went and created a higher high. Once the price created a higher high, you can see that this low was actually engulfed when the price came back and created this lower low. And you can see, guys, that we had a decision point here inside the golden zone, and we had another decision point also inside here. So this is the manipulation area. So you only look for decision points inside the golden zone. So you can see, guys, here that as the price now was approaching these decision points, you can see as the price was approaching this decision point, you can see that this decision point was able to hold the price here. But now it will be risky for you to enter at this decision point because we do not have any price approaching. We do not have any price approaching, or we have this flippy. Maybe we may have entered it because we have a flippy area. It's a flippy area, so you may have entered your first trade here. You may have entered your first trade here, and you can see, guys, that when the price actually approached this decision point, we can see that the market actually gave us a sign that it is a true decision point. We see that as the price was approaching this decision point, it approached it in a 3 drive. And also, guys, you can see that there was accumulation here. So guys, this is a confluence. We have an accumulation with a flippy, we have a 3D. So you would sell here and the price was able to drop, and on this trade you may have hit your first take profit, but it might have been impossible for you to take your target profit number 2. So guys, that's all about the key level over under. So one of the things, guys, that you have to know is that once you actually locate a decision point inside the golden zone, you may have maybe 3 decision points inside the golden zone. Once you have such a scenario, you wait for the price. The price is going to give you a confirmation on which decision point that you need to take. Once you see that a certain decision point is approached, maybe in a 3D or in accumulation or in the form of a flippy, then you can know that that one is the true decision point. And also, once you see a decision point that is a W Maru, as we discussed in the W Maru journal, you can be able also to use some of those characteristics for you in order to filter up and see which decision point that is more likely to hold the price. So guys, that's it for our lesson. I hope you have picked 1 or 2 in this setup. So guys, my advice to you is that you need to go on the charts and you can be able to locate these setups. Once you locate these setups, then I can assure you that it's going to be easy for you to be able to understand this setup. If you don't do the homework, I can tell you, you always be blowing accounts. You always be blowing accounts. If you don't put the work, then Forex will always be harassing you. You will never make it in the Forex market. So it's my encouragement to you guys that you need to put the work. So don't forget to subscribe to our channel and like and share so that other people also may be able to get such information that is going to help and change their trading career for good. So Chat Master here, signing out.